Hey, welcome everybody to the live stream. Another crazy day in the market, this time almost entirely based on the NASDAQ is what I'm seeing right now. Lion already got a live chat test in for me. I always appreciate that. And if you have any trouble hearing, let me know. All the stuff looks good on my screen, but I've messed it all up before. So, so real quick, looking at the top of the board here, NASDAQ, right? Down minus 1.86%. This is exactly why I do not follow the S&P 500 very much, and I do not follow the Dow 30 at all. Sometimes I look at the Russell 2000 just because it's small caps. But we've got oil down. What else do we got? Gold down, silver down, and the 10-year up slightly, although still below that 1.6%. So very, very interesting setup for today. And the fact is that it's a lot of technology. So I just thought it would be an interesting day to kind of hop on and say hi to everybody, see what's going on. For me personally, the ones that are getting crushed in my portfolio, Palantir, which had survived a lot of the volatility last week. Palantir is down 6% today. Enphase is getting destroyed. So that's a killer for me because I bought into Enphase quite a bit in the first part of 2021, and it looks to me like I paid not so good of a price. That started in the 200s. I'm managing down. I bought just a couple shares today because it was in the 130s. Just trying to get that cost basis down. I think I'm at 184, something like that off the top of my head. I haven't updated my stock board to show you guys everything, but I will here, not today, but I will eventually. Square is approaching $200 at 202. Amazon's back under $3,000. I bought one Amazon today. I said I was going to buy it when it was under 3K. Today was the day, but that's such an expensive stock that I wasn't able to do much else. That's why I only picked up one or two Enphase. I have to be careful on Enphase too because I believe in the company and I don't care about today's price. I really don't. I would prefer that it was around 150 if it was going to crash, but it really is a long-term stock for me. So while it's not encouraging the direction that it's headed, don't forget, as I've said numerous times, if you're interested in Enphase or if you bought in like I did, this is a stock with an EPS. This is a stock with growing revenue. This is a stock with growing EPS. So eventually, Enphase is going to grow into their valuation. Whether it's $200 a share, where I started buying at, or 132 is what I'm looking at right now. That probably gives you a PE off the top of my head for the end of this year of about 70. So it's not a bad price considering their growth. Solar in general, we'll talk about in a second, but solar's been hit. If you've been lagging on solar, it could be a good time to get in if you're interested. What else is down? On my portfolio, you've got Etsy at 190. That's another one that, it ran ahead of itself. I'm not too worried about it. Taiwan Semi, which last week fared pretty well in the volatility, but here today we're under 115. If you're interested in Taiwan Semi, it's a stock I've studied a lot about. I really do like this 115, 110 mark. Anywhere under there, I think you're in great shape for the long term. I really do. It's not going to be a plus 100% stock, But as far as sleeping well at night and getting good returns, TSM is a good stock. Let's see. That's it on my losers. On the winner side of the coin, Rocket, which I still hang on to, is, right around $25. Visa's up into the 220s. We knew Visa would come back, and that's what we're seeing here now. DraftKings is held in there. At 60, it did dip under 60 last week, but it's back over. TJX, which is a retail company, I expect them to do well regardless of technology. Sabre, which is my travel play, that's up 4.5% today to $15, almost $16. So there's some good stuff. And Unity Software, which has taken a beating lately, that's hovering around 95 and positive for the day. So mixed bag, seems to be pretty heavy technology in NASDAQ. So that's the lead off. I'm going to grab a drink and then we'll talk about some questions. Sorry, I had to get my cup there. Say hi to everybody here. Let me just go through the questions. Jordan, but he just dropped in, but he knows I'm talking about Enphase. Yeah, it's been like watching the Hindenburg, man. But, if you own Enphase, I'll say it one last time, you have fundamentals on your side. Doesn't mean it won't go down more. But as opposed to some of these other companies that are SPACs with a 5-year PowerPoint slide that says, $100 billion in 5 years, Enphase is actually doing it, okay? And they're making money today. So, ride the wave as long as you can stand it. I'm in for a while. Curtan, message deleted. I don't know what happened. I didn't see it come through. I don't have any special... I'm not muting anyone, so sorry, it must have been auto. Why do you like Amazon at this price? Under 3, if you just kind of study it, let's bring it up. I'll give you my rationale. So it's had a high. I know that looks crappy. I'll fix it here in a second. So it's had a high, I believe, of 3,800 back in the peak of times. Was it 3,300? 3,500, sorry. And getting it under 2,000, getting it under 3,000, while this flat line has been going on, Amazon's been making a ton of money. And so their EPS just keeps going up. So this EPS of 41.83 gives you a PE of 71, which you could argue is high. It's really not on Amazon standards, but I'll show you really quickly here how quickly their EPS is growing. So this is last year, 41.83. Okay, so that's the number we're dealing with now. And this year's average estimate, 47.68. I think that's actually closer to 50. If you get into detailed analysts who know what they're talking about, this number should be about 50. And then next year, you got another leg of it. So honestly, it's not the cheapest stock on the planet necessarily, but I just think that this is a fundamental stock that guaranteed to keep making money, guaranteed to keep delivering value to shareholders. And it's only going to take one catalyst of any kind to push this thing back off of its flat line. So that's why I like it. I like Google for a lot of the same reasons. You could argue that Google's cheaper. Looks like they're in the 35 range right now. And they have a similar story on EPS growth. 58 last year, roughly 70 this year, roughly 80 next year. So you're talking about companies that are growing their EPS by double digits, earnings per share of double digits. Meanwhile, in the rest of the market, we have companies that have single digits or no digits on earnings that, if you did it comparatively dollar for dollar, are trading for a lot higher than that. So there's still strong growth in Google. There's still strong growth in Amazon. I look at it from a barbell approach. So I sort of have my Enphase, Square, Palantir, etc. Sits on like one side of the coin, right? And then what I've found here recently, and I'll do a video on this, is that my barbell was getting a little unbalanced because coming into 2021, I put a lot of risk in on the Enphases and Squares and whatnot, Palantirs. Now I need to get back to the safe. I need to start adding more on the safe side, and that sort of starts with Taiwan Semi. It includes Amazon. It includes like basically the stocks, PayPal, Visa, that while they'll take hits in a stock market crash, their fundamentals will carry them through. They'll be the first in line to go back up. So hopefully that makes sense. Adding Amazon at this price to me is fundamentally safe, and I might lose a couple bucks over the next 3 to 6 months, but it sits in my barbell. From my perspective, it sits on the safe side. So hopefully that helps. Spotify for Lion. I haven't looked at Spotify. Did it get under 1,000? Oh, Spotify. I'm thinking of Shopify. Let's see what we got on Spotify. I'll put it on. Haven't looked at this in a while. Originally, I thought you were talking Shopify, which I've studied before and kind of put a pencil note in for myself under 1,000 if you want to get greedy there. I haven't done that. That's been about a month or so, but under 1,000 for Shopify, you should dig in and see if you like it. So Shopify's one right now that, let's see what kind of growth we're looking at. You're not going to have an EPS, and that's okay. Doesn't mean it's out. I do like to check to make sure that you're making progress towards positivity. Last year was -$3 some. This year, -$2. Next year, -$1. So they're making progress. And more importantly for Spotify, you've got this sales growth that looks really good. So 19.4% here, going from 9.3 billion to 11.2, and adding another 2 billion over here in 2022. So you got to like the trajectory, if you will. Let's see what their 5 years. Does this show up on the screen? Looks like it. Next 5 years, stock growth-wise, they're saying potentially 100+%. That seems a little high. I don't know. I don't think it's bad. You got to get into some of the technicals on these non-profitable companies, which I've been trying to share with you guys more. Here's a 1 year. Try to squish it in. Squish this. All right, so here's a 1 year, what's kind of the standard fare, 50-day, 200-day. You're below 200, which seems to be a positive sign. Your RSI is under 30. Wow. So, yeah, I mean, you have to wonder at this point how much more downside is there for Shopify. This is 231 on November. So I don't know. I think that's one. If you like the business model, it's definitely looking pretty close to a buy. It's not something that I'm interested in as a standalone stock, just because I'm filled up in that category of risk, as I've mentioned before. But I don't know. There's some positive signs in there. That is one with Spotify. Really, any company that doesn't generate an EPS, I think it's super important to read the earnings reports, the presentations, right, with the PowerPoint slides and stuff. Not as much as the numbers that you can get from any website. But what's the story for 2021, right? What are they adding that's going to help them get to that $2 billion more that analysts are projecting? What's exciting for the future? How does the competition look? That's the only questions I'd be asking for Spotify. So hopefully that helps. All right, Rohit, Nvidia, man, it gets cheaper every day. I like it. I just don't know when the bottom is. I think first of all, if you're 5 to 10 years in, and just buy Nvidia under 500, PE at 67. Let me take a quick look at a couple things. Forward PE at 38. I like it. I mean, I liked it under 500, and now you're at 465. The only question is how much farther down does it go? It's one of the key components in the QQQ and NASDAQ, both of which are still getting hit. NASDAQ now down to minus 2%, 1.99%, excuse me. If you believe in the company, which I think there's a lot to believe in there, go for it. Why not? You also have the ARM acquisition, which is going to take a while. And I did an Nvidia video here recently, and I would not project ARM to contribute to their earnings per share until probably 23, to be honest. But the fact that it's on the radar and that they're so focused on data center right now, go watch, I know I'm plugging my own stuff here, but go watch my Nvidia video from 2 to 3 weeks ago. I spent a lot of time reading about them, and there's some good nuggets in there, if you ask me. And I know I made it, so of course I would say that, but it's true. Okay, Derek's here, hanging tight, minimal buying, nibbling right now. I want to see cash cows like Google and Berkshire get hit a little bit more. I think that's a decent strategy. I mean, if you can wait, I'm trying to wait too. But see, I got so screwed, and this is why I talk to you guys about cost basis so often. You know, I got screwed. I screwed myself is the better way to put it. I'm buying Enphase at a top because my only risk was down. I should have waited, and that's my fault, and that's okay because I still believe in the company. But this is the time when you can really do some great things for your cost basis. Whether it's something maybe you bought that you sort of wish you didn't at that time. Let me say, how about NEO, right? I don't own NEO. I don't own Chinese stocks, but NEO was $50, $60. And maybe you bought into NEO, you got a little too excited one day, you read some report, whatever, and that's fine. You bought it and you expect to hold it for a long time. Well, now it's $38. Or, you know, ish. So everything you buy at $38 lowers your total cost basis. It's $35 now. Now, is that a price for, NEO's not a stock for me, so don't ask me about if I would buy it at 35, but I'm just saying if you did your research, you're excited, maybe you bought high at 60, grab at least one share at 35, right? Scrape together some coins and pepper in a few shares at 35 and lower your cost basis, even if you're long. And over time, you're going to have more returns essentially because of it. So hopefully that makes sense. And that goes along with Derek's point about, you know, hoping that Google and Berkshire take more hits. That's okay. I've rooted for that before. As long as Enphase doesn't take any more hits, I'm happy with it. Google under 2,000 is my equivalent of, and probably better than, my Amazon under 2,000 or 3,000. All right. Okay, Craig says I'm right there with you. Have faith in Enphase. It just keeps averaging down. That's all you can do. Unfortunately for me, I'm reaching the point where I really don't want too many more Enphase shares because it's becoming too big over there, but I still believe in it. I don't know what I'm going to do, but anyway. Joe Q, I'm liking Dropbox at the moment, also MercadoLibre. MercadoLibre is very interesting. I don't own it, but I've been following that stock for a long time. I took a lot well, excuse me, I took a little bit of slack from folks because they did a video on it when it was 1700, and I said it was too expensive. And now we're starting to see that froth come off the top of Melly. Melly is an exciting company, and frankly, is a great long-term international growth prospect. And if I was put in a corner on an international stock, it would probably between Melly and C Limited would be right at the top of that for me. But Melly is, I think I saw their most recent projections for earnings per share. They could hit $2 a share this year, which would be great, but that's there's your PE of 700. And then next year, 22 is supposed to be like the next level up for profits for them. And there's everybody $7 to $10. So let's just pretend it's 10 and they hit the high bar. So that's a PE of 130. So buy Melly if you like the story. And I would just advise that you're just getting it 2023. If fundamentals return to the market, which they're starting to, 2023 would probably be the period when things are becoming more aligned for that stock from a fundamental standpoint. Now, Melly could have a headline and get that momentum boost that we've watched over the past 12 months for just about every stock in town, right? Somebody writes an article and boom, momentum, and it runs it up. But at some point in market history, the fundamentals will support the stock, and that's what I think is the key right now. And you would get that in Melly, and anybody else who's running a profitable business. It's only going to go down so far because eventually the fundamentals will support it. When it's a PowerPoint presentation of a SPAC, and I have SPACs, I have DraftKings, and I have BFT. But when you're in that world, you're trading momentum on a dream, okay? Somebody wrote something about the TAM in the PowerPoint, and TAM, just be careful on TAM is all I'll say on that. And so somebody, would take those PowerPoints and they'd throw them out on the web and say, look at this guy, look at this SPAC, it's going to be, $60 bazillion in 2026, get in now. Well, that's a long way away, right? And will it happen the way they project it to be? Whereas you take that same SPAC statement or concept and you compare it to Google, Microsoft, you name it, any solid company, they're doing it today. They're making the profits today. They're projected to grow in the future, not at 600%, but it's way more likely that Google will hit their growth projections than 6,000 SPACs will hit their ridiculous TAM projections. So I'm just telling you, we are going to wake up, and some of them might be my SPACs. We're going to wake up in 5 years, and a few of these SPAC names are going to be like, dude, I remember that. I remember when I thought that was a good idea, right? And we don't know which ones. So you just research and you do your gut check. Don't listen to other people, right? You can hear about stocks from other people, but go read it yourself and say, do I believe this? Do I believe that this person, company who makes, XYZ, is it really as big as they think it is? And if you believe so, there you go. If you don't, better just get out. But anyway, Joe, MercadoLibre, Dropbox, I'm not a huge Dropbox guy, only because I worry about the competition. But if I remember correctly, you're at $23.67. It's not expensive, so that's the good news. Very inexpensive. And if they hit $1.27 on $2 billion in revenue this year, then you will certainly have a stock that goes up from there. I don't see them as a major differentiating service by any stretch of the imagination, but that's my opinion, right? And if you believe in Dropbox, I will say that fundamentally speaking, if it hits like you think it will, then this price definitely will support a good investment. Tesla at 570. 1 second, I'll get to that. JP was right ahead of you. XPI stock. EXP World Holdings. Let me just see what the industry is here. Cloud-based real estate brokerage services for residential homeowners. I don't. I'll put it on the screen for you guys to see what JP was talking about here. EXP Holdings. So since it's holdings, I'm guessing it's a REIT. Don't know. But let's go look at their website, which you can find on Yahoo, typically right here. Is the holding company for EXP Realty, Barbell and Success Enterprises. Okay, so it's not a REIT, it's a company holding other companies. EXP Realty looks like an online kind of Zillow, if you will. All the expert help you need to find, buy, and sell a home. Okay, so that's one thing they have. I've never heard of that brand, EXP Realty. Virbella brings people together to work, learn, meet, train in a virtual world. Okay, so this looks like virtual conferences, right? Like if we were all on the sales team and we couldn't get together, we'd meet in this virtual boardroom like Minecraft or Roblox or something. All right, so that's another one. Success is their other one. This looks like just like a blog. Perhaps for women entrepreneurs, I'm guessing as I read through this. They have Success Magazine. All right, so a little bit of a conglomerate here on EXPI. From an analysis standpoint, looks like they will projected to hit profitability. Sales getting close to the 2 billion mark. Under $1 billion last year. Going to get close to 2 billion and exceed it next year if they hit on their targets. I don't know. It doesn't look too bad. I'd have to, this is another one where I think that, at least for me, I'd have to dig into the articles and the PowerPoints and see what is super exciting, right? So we got a feel for what their little holding companies were, but what are they excited about? You know what I mean? I'm going to guess that it was that home Zillow app kind of thing, because Virbella with the online conferences, I'm guessing that takes a dive this year as things open up. So probably the online sales for homes and Success Magazine, I don't know. But those revenue projections look pretty solid. They're definitely growing. And $40, there's worse stocks in the world as far as, buy 100 shares if you think they're going to be awesome. I don't know. That was my two. Literally, I learned everything about EXPI while I was sitting in front of you. So whatever that's worth. Tesla. Let me get my little mouse thing over here. Tesla at 570. If this world keeps up, I would say Tesla under 500. Today's 561. It would not surprise me to see Tesla under 500. It looks like this is one where, it could be slow and steady. And so I'm not saying 561 or 570 is a bad price necessarily, but I would hold out for more. You got room to run to the downside on this one. I'm not saying sell it if you own it. I'm just saying be patient. Teladoc at 190. I'm behind the curve on Teladoc. I like it. I like the concept. You're at 176. It's one where I'm trying to really understand like why other people can't do this. But the thing I think they have going for them for sure is those insurance partners, insurance company partners. So I think that was a big move. 176, that's could be another one where you have more room to run. Looks to me like sales this year. If I had to guess, I would say under 150 if this keeps up. And I'd be patient here. The way that this NASDAQ keeps going down, I would definitely be patient. S&P just turned negative for the day. Not by much, 0.03%. Square, a reopening stock? That's a good question. What I will say about Square, and even though I'm sort of down on Square here since their last earnings report from a, I don't know, it's like mentally drained on some things that they do. I can't remember if I picked up a share today, whatever. Long story short, what is a reopening play for Square without question is obviously the merchant network should improve, so that's great. What could be bigger is Cash App getting the $1,400 stimulus, which we saw last year, led to the quick rise of Cash App. And we have tax refunds coming in, which are anticipated to be slightly higher this year because of unemployment. I don't know how true that is, but we'll see. So I do like Square to have a monster spring quarter, April through June, right? As all that money hits Cash App. And then for Ashish's point on reopening, you have the vendor network and the marketplace. So yeah, I think it's going to be a good year for Square. And I think with this meltdown on the tech side, I have been poking at it. Maybe on Friday I bought like one share. You're at 203 today, right now. Anything under 200, I would definitely pick at some shares. I don't know, there's a common theme with everything I'm saying across everybody. Melly, Dropbox, all these stocks I'm talking, don't buy your whole lot today. I wouldn't. I would keep picking at it. So Spotify, if you like where it is, buy 2 shares, right? Or, if you're a bigger trader, if you usually have thousands of shares, buy 100 shares. See what happens tomorrow, man. I don't know that this world right now is going to change dramatically over the next week or two. I can see a lot of ups and downs, good days, bad days. And when you take Squares and you take Enphases and people like them, they still have room to run before you would ever call them a pure value play, right? Same thing with Nvidia. And that's the one's getting down there. But it's still a chip stock trading at 68 times. Nobody questions the future. But if you're asking, will the price go down from here? I think there's a chance. So buy 1 share, get yourself set up. And for Square, I don't own that many, about 20 shares. And because of their volatility, I've just been buying 1 share on a day. I'll probably, after we do this together, I'll probably go, if it dips under 200, I'll buy 1 share. And I'll just kind of poke at it like that. Because I don't know how much further down it could go. Square doesn't have any fundamentals that support $200 over the next year or two. The support is 5 years out. That's not a good place to be. There's no reason to buy a stock today if the fundamental return doesn't come for 5 years. Like, what's the freaking hurry? Just get something else that's going to grow and wait for Square to have a really bad day and buy it then, right? All right. Jordan says, what overall sectors do you like? Obviously, travel. It's getting very expensive. Anything consumer, I mean, it's focusing on people out in the world spending money. So that could be a part of this tech meltdown, is that's where money's moving around to, since the other indices are not down. You know, we talked about, here's where we are right now. 1 second. Just look at the top of the board, ignore the square. NASDAQ 175, Dow 30 plus, S&P plus 7, Russell plus. So my point is, there's a lot of stocks having a good day today, even though those of us who are sitting in tech and pricey NASDAQ stocks, we're not having such a hot day, but maybe the money is shifting. And if you're going to shift, go where people are spending money. Good luck finding a cheap travel stock. I want one. It's going to be hard. However, wherever you do think, you know, there's probably still some restaurant stocks out there. Check the bankruptcy, check the debt. Darden restaurants, I haven't looked at them in a long time, but that would be a place. You know, the Six Flags kind of thing. Anything with camping, recreation, potentially RVs and boats. I held a stock called Camping World for a long time. I don't anymore. And that one came around big during the pandemic. You can check. I don't know the Camping World. I don't know if I'd recommend it. They've got debt out the wazoo. But think of those things. Anywhere Americans are on the street spending money, I think that there's a big opportunity. And if you don't, if you can't think of anything, my number one ETF that I'm buying right now is IYC. Okay, I'm going to do a video on it here soon, but IYC, people will give you other names, and that's fine. Don't do it because I did it. iShares U.S. Consumer Services ETF. Just full disclosure, I think I shared this on the last one. Expense fee of 0.3% is going to be higher than some of the other stocks or ETFs that you see. Go to IYC. Let me see if I can get the holdings for you. We did this last time. And the point here is not necessarily for you to buy IYC if you're not feeling good about it, but right here, this is a great list of, you could probably make the argument that every single company on this list is worth considering, okay? And there's 10 pages. I'm just gonna click to 3. So this is a great place to get your ideas, Jordan. And I know it sucks because you're going to have to, like, whatever, onesie, twosie this. There's Darden. There's DraftKings. DraftKings, even though it's technology, sports are starting back up, right? And we have more states legalizing. So I like DraftKings still, even though some would argue it's expensive. It probably is, to be honest with you. But I like their potential for the year. They got Cars, Live Nation, great stock for concerts. I think it's run up a lot. Domino's Pizza had a bad quarter. You might catch them sleeping a little bit. Aramark is food services. That's not a bad play. Advanced Auto Parts. That's good. I don't know. Maybe not on that one. Five Below. These are the kinds of names. Go to the IYC holdings, and if you don't like IYC, that's fine. It doesn't hurt my feelings. And go through their list of holdings and read. And you're going to find some companies, because the problem is when we're all talking about the same stocks, they've all run up. So if you thumb through IYC, you might come across a company that you're vaguely familiar with, and you can do some research and find out. But yeah, other things that I'm interested in right now, to look at my little list. There's a stock switch we've talked about before. It's taken a beating. They house, it's a data, basically a REIT for data centers. and it's under $15 now. And I like that one for the long term. I still wouldn't say it's cheap. I like Skills as a potential starting spot. No revenue though, so I don't know if I'll buy it. Solar stocks are getting hammered. So pick a solar stock you like, maybe even the TAN ETF. Let me see where that is these days. TAN ETF is at $81, formerly as high as $121. So you might get that one in the 70s. If you don't have a solar play, I think you should have one that you're going to hold over 3 to 5 years. You can pick, TAN is the easiest one to pick. Mine is Enphase, but there's other ones too. Jinko Solar, Canadian Solar. There's a lot of decent companies out there that are making money, that are profitable. Solar Edge. And you'll see that their P's are high, but you know, if Biden's going to pull this off with green energy at some point, they're going to go right back where they were. And I've read enough on Enphase that I know that demand is hot right now for residential solar installations. And my guess is once all this money comes back for tax returns, stimulus, etc., you're going to have people reinvesting into their home. With projects this year, potentially people that refinanced, like me, I live in Ohio, right? So we have a cold winter. If I refinanced in November, right, I wasn't doing any outside projects at that time. So anybody who was going to do a roof or something like that is probably just now about to kick it off. So think about that, how the money flows. All right, let me get a drink here. Do we finally see me on Zillow? Guess what? I love Zillow. It really pisses me off how run up it gets. If the day it goes under 100, which may never happen, let's see where we're at. I'll buy it under 100. 126. Sorry, getting a drink. 126. Here's the 1 year. 127 on January, ran up as high as $200. Are you kidding me? The best that they'll do this year is $1 per share. But yeah, I'm interested, not at 126, because I know one thing about Zillow is I think housing is strong this year, as you saw me stay in Rocket and all those things. But eventually Zillow is going to go down, because somebody will have some shit story about how real estate's falling apart. And that's the day I'll buy Zillow. Because I think Zillow doesn't necessarily need, in the right circumstance, it doesn't need the real estate market to be smoking hot to be awesome. It's about digital transformation for Zillow. So conceivably, you could have 50% less houses sold, say in 2023, just to pick a number. But Zillow's income can continue to grow, right? Because they're getting more digital sales. So that's the sneaky trick on Zillow. Just be patient. Redfin's in there too. I think Meet Kevin, he's a big Redfin fan. I prefer Zillow because it's something that I'm familiar with and I've used in Ohio. But both of those are tanking. What was Redfin? Redfin got up to 96. It's at under 60 right now. So there's opportunity there. They make less money than Zillow. So you'll have to pick one or the other probably. I would personally go with Zillow, but you know, I don't know that much about Redfin. Spotify is Netflix for music. Yep. Signing big podcast names, growth trajectory. I agree. I mean, everybody with audio, everyone's high on audio, right? And you just had Clubhouse or whatever the new crazy app is. So I do like it. I just think you can get greedy. Costco's been kind of sucking wind here lately, hadn't it? So you had a peak, here you go. So I like Costco as a long-term business. I do not own it. This would be in the IYC for sure. 391 on Thanksgiving-ish time. You're down to 311. PE of 31. $10 a share in profits. Dividend almost 1%. You know, I don't mind it. Let me see what kind of growth they're hoping for this year. Looks like maybe 10%, something like that. So statistically, you're getting it now. If you look at this chart, trailing PE through the past years, right? All the way back to 2016. I mean, you're almost at like a super fair price that they would have got in 2016. Now, I think the only catch is maybe things weren't going as fast because this forward PE isn't dropping as quickly. But it's there. It's very, very close if you're a Costco fan. Very close to being a buy in my standpoint. And if you already hold shares, then maybe you just add to it. Roku. I love Roku. That's another one that I would potentially buy. I love it. So it's just, the valuation escapes me a little bit, to be honest with you. I would buy that one. They don't make their first profitable dollar until next year. So if they made $1, it would be a PE of 328. However, their top line is just unbelievable. 40% growth this year, potentially the same next year. I still think you get greedy in this meltdown. There's nothing to support this for Roku. There's nothing to support the number. So I'm not ragging on the company because I think that if you bought at 328, I think 2 years from now, the numbers are going to be bigger than people think. So I'm not bagging on it. I'm saying here today, with the meltdown and the sentiment that potentially Roku will suffer this summer because folks will be out and about. I mean, that's, relative, right? But you might be able to get it for cheaper. I don't think this is the bottom for Roku. That's my 2 cents anyhow. But great stock. Anything that's growing at 40% when they already have $2 billion in sales. Is that what I'm seeing? 1 second. Okay, last year, $1.78 billion in sales, growing at 40% for the next 2 years projected. That's pretty strong. I don't think it's $300 strong, but it's strong. All right, Nvidia good long, of course, always, Igor. Bought Costco at 329. Yep, everything Lion said about Costco, I would agree. I don't own it again, but they just got a formula, man, and it's proven successful. People are spending, and the other weird thing about Costco, you would think that, the bears would say pandemic's over, lockdown's over, people aren't going to buy pallets of shit anymore. I would argue that the great American road vacation is about to take off, right? Boats, coolers, RVs, minivans, and they're going to go to Costco to buy all the crap that they put in there. So I wouldn't expect Costco to suffer mightily in sales this year just because folks aren't hoarding toilet paper. Arguably they'll be buying more expensive things than toilet paper. So why not? What's your view on Equinix? I'll take a look. Don't know it off the top of my head. It's a REIT. Let's see what they specialize in. Enabling digital leaders infrastructure for digital. Trying to get some more info. I can put this on the screen. Page is loading, so here you go. Global platform, foundational infrastructure that fuels success. So it must be, looks sort of like the data center. Yeah, visit data centers. So probably similar to Switch that I just said. Now I'm more familiar with Switch, but looking at this map real quick and not going into huge detail, they have way more locations than Switch. Let's go back to this. 1.8% dividend, profitable company. Little scary over here on missing revenue time and time again. So I'd have to read more. But I guess I would say, Raul, that I like the industry. I like the 2 seconds that I saw. I like the data center industry for the future, and I like that that company has a lot of locations. Now, why can't they hit their earnings for 6 consecutive quarters? I don't know. So that's where you have to dig in. Maybe it's on sale, right? Maybe that's what you're thinking, is that it's on sale, but I would just keep digging. Pandemic dip of 506. Today you're at 595. Peak was 826. So what happened between October 13th, and we know the stock market bled out, so this isn't all Equinix, don't know. But the stock has lost a couple $100. So just make sure you know what you're doing. But not a bad call. Jordan, oops. Every time I touch the chat, it wants to progress down to the bottom. And I want to, some of you guys who've been waiting, I like to get your questions. Roku, Nvidia, got it. Just want to say your channel is great. Thanks, Jordan. I appreciate it. Lion, ARK, buy. I'm still in ARK all day. At these price, but do the onesie twosie thing on ARK is what I would recommend. 1 or 2 shares a day during these red days. Just keep averaging down if you're down. I'm not down because I've held it for so long, but I'm still picking off here and there in the retirement account. Oh, look, I'm not going to be able to say your name. Jord. Raul, I work at one of the Equinix sites, and honestly, the management in EU is pretty shitty. I don't know whether they are overvalued and what the financials are, but I wouldn't recommend it. So very interesting. Jord, if I said it right. They're the market leader. Anyway, good call in there. Tilray or Afria. I don't know much about the weed stocks, just to be super honest. I never got in, and I will be watching it. I'm not 100% sold that there'll be multiple winners. I think we're going to probably see, in my opinion, in the United States, not international, I think we're going to probably see maybe 2 big winners, maybe 3. So just be careful. And I don't know if the winner is the person who's making the product, right? The supplier. The winner might be the retailer, in which case there could be more. So watch, just, go with what you believe in. You probably studied it more than me, but just know how many opportunities are going to be in that market. And I'm not sure if the person who's farming is going to be the winner. JP, thoughts on ARK? Yep, just covered it. I think long term, it's a managed fund, and I'm old enough, or I've been doing this long enough that I was in ARK before it took over YouTube, and now you can't go a day on YouTube without 12 creators saying, what did Cathie Wood buy today? Listen, she's been doing this in my world, since 2017 or 2018, whatever. I bought in, some of you have heard this story, I bought in for sure in 2018 because her fund held GBTC, which was the Bitcoin trust, and also held numerous other growth stocks that I was a little too nervous to own on my own. But I read a lot about the firm and it seemed good. So I'm an old schooler over there, and it's done nothing but perform. And I understand we're seeing a tech meltdown right now, but it's a managed fund. She doesn't have to stay in anything. You know, I doubt she sells Tesla, right? Because that's been her big thing. But she could sell Tesla tomorrow and say, whoops, that one's tanking. We'll come back to it, but I'm going to, pivot everything over here. So that's why the expense fee is so high. Some people say it's unjustified. I say it's justified based on performance. And the fact is that she has proven time and time again to outperform. So that's where your 1% fee or whatever it is comes into play. Put your money in, a portion of your money, and trust the process. I don't think there's no indication that she has lost her advantage or that she would be looking to let people down in any way. So who knows? Maybe we're all wrong, right? But I'd be surprised. If we close red today and tomorrow, could be hurting for a couple months. JP, I do think, I really, guys, I don't think today's your last day that you're going to get stuff on sale. That's why I only buy one or two today. I think that there could be more of this, and maybe through May. What's going to stink right now is we've pretty much reached the end of the earnings season, and that was like a week ago. Okay, so there's no more earnings till whatever, late May, June. So there's going to be very few revenue headlines come out. Now, you'll still get the headlines with the partnerships, right? So that can boost some things. But you're not going to have these crazy revenue beats that fuel it. Like, let's say Nvidia, right? Nvidia typically blows out their earnings, almost always. But we're not going to hear from them again for 3 months. Same thing with Apple. Same thing with everybody. So everything that we thought was going to be right over Christmas, Q4, holiday shopping, etc., it was right. And all the stocks went up and we were all happy, right? They went up a little too high, and now we're not going to get earnings for a while. And so we're in a weird spot where we're mostly open to bad news right now. And I don't want bad news. I'm not saying that. Just saying the environment is going to be more sensitive to bad news because it'll probably be the loudest news we have. But, I would anticipate after Easter, certainly into May, that we start to see some economic good news in the terms of more jobs being created by nature when, it's funny I said by nature, springtime generates more jobs. If you think about construction, road repair, landscaping, festivals, concerts, outdoor dining, more jobs are created just because the sun comes out in spring. So that's going to help jobs. We also know that there's reopening, right? So things that were closed last year are going to produce more jobs. But a lot of that is going to be in May. In my probably in Florida, it's going on right now. Where I'm from in Ohio, if you live in Minnesota, if you live in Canada, shit hadn't started yet. It's like May 1st. Things are going to get better. Next 30 days could be rocky, and that's because you're not going to have a rocket ship that lands and says, this company's awesome, they just blew it away and sold a gazillion things. That's my 2 cents anyhow. So pick your spots. Save your money, buy what you believe in, and just buy a little bit. See what happens tomorrow. Price could be lower. Trust me, I own Enphase. The price could be lower. All right. MC Porter, it's my first time trading. Can you help me? Probably not. Not because I don't care, but you should probably be in an ETF. And there's so many awesome places to read that the people are more knowledgeable than me. On the bright side, MC, I just made 4 beginners. I don't have a lot of beginner content, so I made a Yahoo Finance. The way I use Yahoo Finance video is on my channel. That might help you a little bit. But there's people that all they do is train people in the market. That's not me, unfortunately. Cannabis, I don't want to comment because I just don't know anything about it. JP, it's crazy because it looks like IYC only pulled back once, and that was in March. Yep. IYC solid, boys. Go down the list. Don't do it because I told you. Read the holdings. Think about it in your mind. Do these companies look like they have better chances in 2021? And if you say yes, just read every name and say, is 2021 better for them? And I think you're going to see like 90% of those names, the answer is yes. Oh, we got a lot of questions like, what the heck does Kathy Woods at ARK have Zillow as their biggest holding? I'm not sure. Maybe an ARK F, but I'm not sure. SPY S&P 500. I'm not going to lie, I'm not a fan, but I would rather own the QQQ even today on the tech meltdown. We're at minus 2.41%. Looks like where we'll close. Let's take a look. Is it 402? Finished at minus 2.41%. S&P 500 down 0.5%. Remember, this was positive at the start of the call. Russell 2000 finished strong. Oil down a little bit. That had been going up. Gold still under 1700. Silver flat at 25. 10-year never did make it to 1.6, which is good. I want to keep it below there from an emotional standpoint. And Bitcoin, you know, getting closer to 52,000 again. So generally speaking, down day. All right, so hey guys, I am going to be done for today, but I will be back sometime this week for more questions. Thanks to everybody who showed up. Really appreciate the support, and we'll do this again soon. So thanks everybody. Good luck in your trades. We'll talk to you soon.